Hi, this is James Shade with Westpac London's end of day report for Wednesday, the 12th of September. Well, it was all about the German Constitutional Court ruling, which came out just after 9 o'clock London time this morning. And the court dismissed the various motions that sought to block German participation in the European Stability Mechanism, which will be the permanent bailout fund taking over from the EFSF temporary fund, which has been in action for a couple of years now. There were very few caveats. Basically, they've capped the German contribution at 190 billion euros, which was the amount proposed anyway, and said that any extension of that or any further funding for it would have to be approved by the German Parliament. But apart from that, basically a green light, and the German President is going to sign fairly shortly, apparently, the necessary legislation for that to go ahead. And already the Spanish are considering not actually accessing the fund, but are certainly continuing to argue that the European Central Bank should buy their bonds, support their bond market to hold down yields. But they're still saying they don't want to put in place any further austerity in exchange for that, arguing, well, our bond yields have fallen already, with the ECB having announced that it's prepared to conduct outright monetary transactions. And the French are actually also saying to the Spanish, you guys should seek bailout assistance, because I think, and this is my view, I think the French are saying if we can ring-fence Spain, maybe the attention won't come looking at us, because of course the French stock of debt is actually higher as a percentage of GDP and in euro terms than that of Spain. So all systems go in terms of European policymakers actually finally managing to achieve something. We're going to get the permanent bailout fund. We've got the ECB prepared to buy unlimited quantities, amounts of the bonds of countries that ask for assistance and commit to various conditions to ensure that they don't, the moral hazard associated with lower bond yields doesn't discourage these governments from still putting in place measures they need to, such as economic reform, fiscal cuts and so on. So fairly positive news out of Europe there. Greece is looking at selling 40 islands to try and raise some cash to get its budget deficit down. They've been a bit slack in Greece on their asset privatisation program. An airport's been looked at by Qatar apparently as well. They need to basically get their budget deficit down quickly so that they get the next tranche of bailout funds. So they're coming up with all sorts of proposals now. European industrial production rose 0.6% in July. That reversed the June fall, but still saw production down 2.25% compared to a year ago, which is about where it was running in the first few quarters of the 2008 recession. The only other thing on the economic front of real note to mention was that the unemployment in the UK fell 15,000 in the latest month. That's benefit claimant count measure. That's the biggest fall since 2010. But what really surprised us was that employment rose 236,000 in the 3 months to July, on top of gains worth about 175,000 in the previous 2 3-month periods. So 3 months to January, 3 months to April, 3 months to July, we've had steadily growing employment in the UK, and the other 3 quarters where the economy's been in recession. In fact, the last time the UK economy showed a decline in employment, in jobs, was the 3rd quarter of last year, which was the last quarter that the economy actually grew. So basically, we're now coining the expression a job-rich recession to describe what's happening in the UK. Either that, or there's something wrong in the statistics, or UK bosses are hiring lots of people to do less work and deliver less output, implying pretty dismal productivity. So it's a bit of a conundrum, but nevertheless worth a mention. All eyes are on the Fed now. We've got the first day of the meeting's already underway. We've got the decision from the Federal Reserve tomorrow. We think they'll announce further quantitative easing. The form, well, remains to be seen. Maybe it'll be a full amount will be announced, 600 billion say, or maybe there'll be a monthly amount of asset purchases that they'll announce. I don't think there'll be a target for things like the unemployment rate or inflation, but certainly some form of balance sheet expansion is expected. It's priced into the markets. There'll be significant disappointment in markets if Ben Bernanke and his team don't deliver on that. So that's it, I think, for the news today. In terms of markets, we've got the FTSE in London. Actually, it's down 0.2%, but the French market's up 0.2%. The German market up 0.5% today. The Spanish market up 0.75%, and the Italian's up more than 1%. And the Dow at the moment up 0.2%. And I'm just hearing in the background that the iPhone 5 has been launched. It's thinner, it's lighter, it's got a bigger screen and a longer battery life. So it'll be interesting to see how Apple stocks go today. Okay, in commodity markets, oil prices down 0.2%, $96.98 a barrel. Copper's down about the same amount, 0.2%, and actually gold's down a tad too, just 0.1%, which is $1,734 an ounce. The Aussie dollar, it did touch 1.05 against the US dollar almost today. I think at 1.049 something, but it's at 1.046 at the moment. Still a little bit higher than when I spoke yesterday. We've got figures in Australia on unemployment expectations and inflation expectations coming up on Thursday. Okay, that's it from me for today. I'll be back tomorrow.